Australia's unemployment rate has jumped from 4.3 to 4.5%, according to the latest figures from the Bureau of Statistics. That's despite an additional 15,000 people finding work last month. For more, let's bring in our finance presenter, David Chow. David, so just how weak are these numbers?
Well, it's pretty weak, Mel, and I've got a chart to help illustrate the point. So when the chart loads, you can see the unemployment rate now is at a 4-year high. So the highest level since November 2021, which is the COVID pandemic period, where parts of Australia were in various stages of lockdown. Though I do note it's lower than the pre-COVID levels. But I guess with today's figures worse than expected, it does perhaps signal a trend. It has been a lot of people reporting it's been harder to find work compared to a few years ago. And let's get a deeper dive in these figures and as for what it could mean for the economy, we should bring in right now Besa Deda, the chief economist from William Buck. Hi there, Besa.
Hi, David.
The RBA has said Australia has a tight jobs market with low unemployment. But with today's surprise increase in the jobless rate, is that a sign the Australian labour market might actually be in worse shape than what many economists had thought?
I think it could be in worse shape than what the RBA is anticipating, because if you have a look at the profile of forecasts that the Reserve Bank has published, they're looking at an unemployment rate in the quarter average for December 2025 of 4.3%. And we've got a result of 4.5% for September. Now, we're not yet in the fourth quarter, but we're certainly starting with a higher base. So it does suggest perhaps the jobs market is losing more momentum than perhaps what the Reserve Bank has factored in. It's still a healthy jobs market, but it's quite clear there's a slowing underway, and there's likely to be a further slowing that occurs. If we have a look at forward-looking indicators, for instance, the latest ANZ job ads showed the biggest drop since February of last year and is pointing to further jobs weakening. And then in terms of our own liaison with recruiters, they're telling us that employers are becoming a lot more selective about skills alignment. And so that does fit in with this overall idea that the jobs market is softening.
Yeah, it's interesting you mentioned the Reserve Bank forecasts, because in their recent statement on monetary policy, the RBA predicted unemployment to peak at 4.3% and stay that way until late 2027. But today's result was quite a bit higher than that. So it sounds like the RBA might have got it wrong.
Well, it suggests that the jobs market is deteriorating a little bit more than perhaps what they've anticipated. They have said in rhetoric that the jobs market is loosening, or words to that effect, but that the market still remains tight. I guess the concern is what happens with the outlook. Look, we do know that employment is a lagging economic indicator, and certainly up until a few quarters ago, the economy was going through quite a soft patch. But what we've seen in the last 3 quarters is that economic activity has started to improve and a recovery is underway, but it will take time to flow through to the unemployment rate. So we're likely to see the unemployment rate get worse before it actually improves, because it is a lagging economic indicator and because of what that job vacancies data is pointing to.
Yeah, so when you say get worse, how much worse do you expect it to get?
Well, I thought it would creep up to 4.5% before the end of this year. So it could be a little bit higher than that now, given today's figures. But look, I'm not looking for a 5 in front of the unemployment rate over the next 12 months. So I think it'll still stay low, but it's more that we are witnessing that loss of momentum in the jobs market. And it does then keep the door open for a November rate cut. But of course, we've got one shoe down with the jobs data, and we need the other shoe down, which is what does the quarterly inflation report on the 29th of October tell us.
So Besa, the odds of a rate cut from the Reserve Bank next month have shot up after these weak job figures. So how confident are you that there'll be a Melbourne Cup rate cut?
Well, after the last Reserve Bank board meeting, I didn't hold my November rate cut with a lot of conviction, but I did leave the rate cut forecast in for November because I was concerned about the loss of momentum in the jobs market. So I'm keeping that November rate cut forecast in, and certainly overnight the Reserve Bank Governor Michelle Bullock spoke at a forum in Washington, and she also spoke to the fact that monetary policy is still a little bit restrictive. So we know there's more easing that's likely ahead, but it's a question of timing and a question of how many rate cuts. So look, I still think there'll be 2 rate cuts before the middle of next year. I'm still favouring a November rate cut, but November is certainly a close call, and a lot will come down to what that quarterly inflation data reveals. I think it'll be an outcome of 2.7% for underlying inflation year on year. But if it's something higher than that, I think the November call becomes very close, and there's the possibility of a delay to December or February.